Hello, everyone. It's Dr. Lisa L. Campbell wishing you a warm welcome to I had to think about this, week number 6 of our outpatient billing and reimbursement course. We have 2 chapters this week, therefore, we have 2 lectures. So let's dig on in. So, this chapter is all about commercial automobile, disability, and liability insurance. As such, our topics or objectives for this week will focus on those areas. So, chapter 12 really looks at some basic instructions for completing fee for service claims that are generally accepted nationwide by most commercial health insurance companies. Now, the book talks about generally accepted because the author of the book couldn't possibly know what all the insurance companies, accept. Those things change. So when we're talking about Aetna, United Healthcare, um, Cigna, Blue Cross Blue Shield, right? All those different payers, they have rules. In fact, we have a next chapter will actually be dedicated to Blue Cross Blue Shield. But nonetheless, the instructions that are presented here apply to all primary commercial and HMO fee for service claims. Now, one thing that really want to make sure you understand, especially if you get a question about this on the CCSP exam, which I don't think that you would, but it's better to be over prepared than under prepared. So, fee for service in a HMO setting is exactly as it means, right? There's a fee that is paid for the service. HMO is typically operated on what is known as a capitation model, where you're getting paid per member per month. And so, the chapter calls out specifically that these are instructions for HMO fee for service non capitation claims. All right. And in this chapter, they also will cover um, how do you handle situations when the patient has a secondary insurance or some type of supplemental plan. So, when we talk about commercial health insurance, we're talking about, and you've seen them on the news as of late, the tragic situation that happened with the CEO from United Healthcare. But these are commercial plans, AKA private health plans for profit companies, even though some are nonprofit, but policyholders pay monthly premiums for coverage. Monthly premiums for coverage. If you drive a car, I want you to think about the monthly premium that you pay for coverage. Now, this does not mean that the premium pays for everything. It says you have coverage, right? And so it doesn't matter if it's an individual plan or a group. Services are covered based on what has been negotiated. Oftentimes, patients in the healthcare setting don't really understand how insurance companies operate. And so it's really lost upon them that the doctor's office didn't decide what was and wasn't going to be covered. It was negotiated between two parties, and the doctor's office was not at the table. Okay. Premiums are paid, or premiums are and benefits do vary based upon the type of plan offered, but group insurance usually costs less than individual health plans. So think about group being a part of a group, a larger population that are paying into the group, whereas individual, It's you and you alone. So, individual health policies are purchased by individuals from health plans, which are heavily regulated by the states. The book talks about four types of plans. First, fee for service, also known as an indemnity plan. This is a traditional plan that covers a portion of the services, such as, inpatient hospitalization, doctor's office visits, and then the patient pays the rest. High risk pools, these are known as the plans of last resort, right? This is health insurance for individuals who cannot obtain coverage due to serious medical conditions. And certain eligibility requirements apply, right? Such as you had to have been refused coverage by at least one or two health insurance companies. Managed care, HMOs, I talked about this in, I want to say, week number 2. And so examples of managed care plans are HMOs, preferred provider organizations. And then lastly, association health insurance. And as the name implies, this type of insurance is offered to members of a professional organization and marketed to small business owners as a way for them to cover their workforce. These plans are not subject to the same regulations as group health insurance. And so the plans, the plans, you're talking to a small business owner. The plans are risky. All right. Group health insurance plan is available through employers and other organizations. And let me just be clear, other organizations are like labor unions, just to name a few. Employer based group health plans can be less expensive than individual health insurance policies because all or part of the premium is paid by the employer. And so, as it relates to EGHPs, um, they cover all employees, regardless of health status, can't be canceled if the person gets ill. If the person leaves the organization, the company has to offer COBRA, which allows the patient or the employee patient to have continuation of coverage that can last from 18 to 36 months, depending on the situation. But here's the deal about COBRA. And this was something that was afforded to us all as a result of the HIPAA law. But the thing about COBRA is, let's just say every month your premium was $900, and as the employee you paid 300 and your employer paid 600. When you go into a COBRA situation, you pay it all ALL. All right. And then EP EGHPs has limited employer plan options. So, prescription drug is an example that covers a certain list of medications. We call that a formula. Certain lists, not all. All right, on to automobile disability and liability. Um, Again, the author could in no shape, form, or fashion cover everything you need to know about these types of plans. And one thing that you do need to know, automobile, disability, life, they're not commercial health plans. And in a workplace setting, if you have these three types of patient encounters, it is recommended that you keep them separate from the medical visits. Okay, that is the recommendation. So there's no confusion. So automobile is a type of indemnity insurance, and you're like, oh, I saw that before. So, indemnity insurance compensates policyholders for actual economic losses up to a limiting amount on insurance policies. And it usually requires that the insured prove that there's a loss before payment is made. So, think about this car insurance situation, right? So, the automobile policy is a contract between the individual and the insurance company, whereby you, as the driver, pay a premium. In exchange, the insurance company agrees to pay for specific car related financial losses during the term of the policy. So I know some of you are thinking, yeah, they got to have active coverage. Absolutely. So, available coverage typically includes collision pay for damage to a covered vehicle. Comprehensive pays for loss of damage due to a covered vehicle. So think about collision versus comprehensive, like liability versus full coverage. Some of the plans have emergency road service. It depends on what you negotiate, or yeah, negotiate with the payer, I mean with the insurance company, right? Because they'll say things like, um, your premium could be this, this, and this a month, and you get this, this, and that. And so you kind of decide based on what you can afford to pay. All right. Liability pays for bodily injury and damage to others. It also includes like medical expenses, lost wages. It could also cover medical payments, so like funeral expenses, as well as the other type of coverage is personal injury protection, right? And this basically covers medical expenses for the individuals, regardless of who's at fault. Insurance today is really a tricky situation. I'll just leave it at that. Disability insurance, or also known as disability income insurance, is reimbursement for a loss of income as a result of, watch this, temporary or permanent illness or injury. Disability insurance does not pay for health care, but it provides financial assistance to people who have disabilities. So as you all are thinking about when you start your jobs as coders and your employer offers you insurance, having this knowledge honestly would be is great, because you can understand when human resources is asking you to select what coverage you want, you understand what is or is not included. So, the person who actually has um, disabilities will either use private insurance, Medicare, Medicaid, or other insurance for their health care services. So, this insurance covers the income, not the health care. Again, organizations generally will have separate records, and disability benefits are generally paid when you can't do your regular work, right? um was you were employed when a diagnosis associated with the disabilities was established. You actually have that insurance. So now I will say this: you could be found ineligible for this type of insurance if you are getting unemployment, you were committing a crime when you got this disability. And I'm chuckling, but they always find some type of way to not pay. So a disability claim begins on the date of the disability, and the disability payer calculates how much money the person is going to receive, and it's a benefit that is received during what is known as a base period. And so all of that is predetermined, and calculated for the patient. Um, so they, the person receives this payment, and they are going to get it until the physician says, that they no longer um, need this, that they can go back to work. Oh, I already talked about the ineligibility part, so I'll just keep on going. Oh, I also talked about this already. So I guess the other thing that I want to talk about is you do get taxes taken out on this. Um, and once the doctor certifies that you're able to go back to work, it's over. All right, liability insurance. So, liability processing of a liability claim is actually not covered in this chapter. But basically, liability insurance is a policy that covers losses to a third party caused by the insured, by an object owned by the insured, or on the premises owned by the insured. So, the insured is basically at fault. Liability insurance claims are made to cover the cost of that medical care for like traumatic injuries, lost wages, and in many cases, compensation for the person's pain and suffering. Most health insurance contracts state that health insurance benefits are secondary to liability. So you've heard this word a lot, primary versus secondary. You saw that on the claim form. And basically, it's all about, listen, who is paying first? All right. So when you are filing a liability claim, you do regular patient billing instead of the claim form. If the liability claim is denied, then you submit the claim to the health plan. You attach the denial so that they can kind of duke it out. Negligence. When negligence by another party is suspected in an injury claim, the individual or the group health insurance plan will not reimburse the patient for medical treatment of the injury until one of two factors are established. Number one is determined that there was no third party negligence, or in cases when the negligence did occur, the liability payer is going to determine that the incident is not covered by the negligent party's liability. So it's one of these two factors. All right, commercial insurance. So, commercial insurance claims processing is really governed by an official body. That body is called the NUCC. I cannot remember what that stands for. I think it's the National Uniform Claim Committee. That sounds good, right? And so they establish, the basic foundation, and then the commercial health plan may require variations of those rules. And so if that payer is telling you that they want things in a certain place, then you put it in that place, okay, in that part of the claim form. Something else to know about commercial claims. We already talked about, the 1500 claim form. You also have to think about which insurance is primary, which insurance is secondary. Government payers are always the payer of last resort. So if the patient has an employer plan and a Medicare plan, Medicare is going to be secondary. The employer plan, the EGHP, is primary. Um, there's also something called the birthday rule, which is related to children when a child is covered by two or more plans. The primary plan is actually the parents whose birthday. Birthday. Let me be very intentional about that. It's the birthday. Why am I saying birthday? So it doesn't matter who is older, it's about whose birthday comes first in the year, right? So let's say um, one person is in February, the other one is in March. The person who is in February, that's the primary payer. Okay. So when a patient has a primary and a secondary plan, um, there are steps that we put in place. And I was just thinking recently, my husband's insurance contacted him because they wanted to know if I have any other coverage. And they're asking that question because if I have other coverage, I'm on his insurance, but if I have coverage, that I should be going with that coverage as my primary and not his insurance. Basically, they don't want to pay. So when the patient has a secondary insurance, the bottom line is you send it to the first payer, and then after the first payer pays, you send it to the secondary payer. So on that 1500 claim form, you know how we had blocks 9A through D and 11A through D. The primary goes in the 11 box. The secondary goes in the 9A through D. All right. There are some additional notations here on that claim form. There's a copy of it in the book. At the very top, when we're talking about a commercial, you want to put a X in group health plan when you're dealing with this type of payer, and then you want to put the oh gosh, I can't think. Oh, the group number in block number 11. All right. After I'm doing like 10 of these a week, my brain gets fried. All right. So we talked about automobile, disability, and liability insurance. Next up is going to be Blue Cross Blue Shield, Chapter 13.